So guys, welcome to Legit Crypto and Forex, and today in this video I want to be teaching you on the steps of successful trading using the Wychoff knowledge or the strategy. Now Wychoff has 5 trading steps that he actually postulated for forex traders, and I want to teach us this trading strategy today so that we can actually use it in order for us to trade our forex market. Now this is mastering Wychoff 5 steps of successful trading. Mastering Wychoff 5 steps for successful trading. Before I move deep into this video, if you have not subscribed to this channel, do well to subscribe to this channel. If you have not turned your own notification bell, do well to turn the notification bell. Click it at the top right corner of your YouTube so that you will be notified whenever I upload a video such as this. Now it's going to be a quick one. I want you to follow me, and it's going to be interesting. It's going to be how you can master these trading steps by Wychoff so that you make profit in the market. Now first thing first, let's move on. Let me delete this. Now first thing first, there are steps you need to take. 5 steps. I will be writing them here for us. 5 steps. 5 steps. 5 steps for you to take. 5 steps. For you to take, so you can master this strategy. Number 1, you need to determine the market trend. You need to determine the market trend. That is the first step. You need to determine the market trend. You need to determine the market trend. Now, look at this quickly. You will discover that here, if you look at this place, you discover that the market trend here is what? Is bullish, which means that we are going for a buy. This is bullish market trend. This is bullish. See it here. It's actually what? Bullish. The trend here is bullish. Price is going up. This is bullish. Are we together? This is bullish. Price is going up. Now this means that anything that they are going to be doing at this particular place, anything they are going to be doing should take you forward for a buy. You should be looking for pullbacks for buys. Looking for pullback for buys. Look at it, pullback for buys. That is your agenda. Now your agenda should be that you are looking forward for pullbacks. We are looking for pullbacks. Look at this place here. Look at this place. It started from this particular region. It started from this particular region. after these after these support here at this particular region, this support here, after this support here, we saw price moving out of this breaking and then forming a movement which necessitated our buy movement. Look at it. From there we discover that price begin to buy, right? Price from here, after this particular place, price begin to buy. See, price begin to buy. Now if you are to consider this market, you are considering this market as what? As a bullish market. This is the first step for you to know how to trade using the Wychoff steps. The first step is determine the market trend. Now when you have determined the market trend, that's when you can be able to know where you are actually heading to. When you have determined the market trend, you'll be able to know where you are heading to. Now we are actually heading what? For a buy. That's bullish movement, because we already understand the direction of the market. We understand that the market is what? Is bullish. So first thing first is what? Is to understand that determine the market trend. Determine the market trend for you to be able to trade the forex market successfully. First, determine the market. Now look at price and the volume together to find a trend. And when you have done that, when you have looked at price and the volume, you will get what? You definitely get the trend. Now it can either be an uptrend, which we are seeing here. This is an uptrend which we are seeing here. It's actually an uptrend, and then it can either be a downtrend. Now it can either be what? A downtrend, like what we're seeing here. See, it will either be a downtrend. Now any of these can work. All you need to do is for you to notice the trend that you are in, a downtrend, or is actually a sideways, which is range, sideways trend, which is the range, the ranging market. Now this is a ranging market here. This is a ranging market here. This is a ranging market here. Look at this. This is a ranging market. This is a ranging market. So once you see this, you should know that this market is actually in a range. It's actually in a range. Now there is no decision in the market. That is why we always have a ranging market. Once there is no decision in the market, we will definitely have a ranging market. So this is actually the first step for you to be able to understand or to be able to trade the forex market. That's the first step according to Wychoff. That's the first step. Understand your market, whether it is an uptrend, whether it is a downtrend, or whether it is a ranging market or we call it sideways market. Now this is the first step. This is the first step. So first thing first, have this knowledge, put it at the back of your mind, so that you won't be taken by the market. So the next step is for you to be able to select asset in harmony with the trend. When we talk about trend, like I said, we're talking about either we are moving uptrend or downtrend. So you need to select assets that is in harmony with the trend. Now trade in the same direction as the trend. Like I used to tell you people that the trend is your friend. The trend is your friend. If the trend is going for a buy, then that is bullish. Then you should be able to follow the trend and buy. If the trend is going bearish for a sell, you should be able to follow it and trade for a sell. Now you need to understand that there are different pairs that you can trade. It is not only one pair that we have in the forex market. We have different pairs and you can be able to trade them. Now this is another pair, GBP JPY here. So there are different pairs, but me, I'm focusing on only these. There are different pairs, but trade pair that is actually in actually harmony with the trend. Always look for trade with trend. Now the number 3 is that, okay, let me write it for us. Number two says select assets in harmony with the trend. That is number 2. Select asset with harmony with what? With the trend. That's number 1. Number 2, that's number 2, sorry. That's number 2, so sorry. Now this might delay us, so let me just leave it like that. Number 3, identify asset with sufficient cost. That's number 3. To identify asset with sufficient cost. Now what is sufficient cost? You need to make sure the asset that you are trading has potential cost to move enough to make profit. You know, I did a video, cost and effect. After a cost, there is definitely an effect. Now the effect is what we enjoy in the market. So every trader is looking for trade that has a cost. How do we identify such? Now a small seed in bad soil won't grow, but when you see a big seed in fertile soil, it grows into a tall tree. That's how it is. There must be a cost. Now, which means that after every consolidation of this nature, there must be cost for price to move. You get it? After consolidation, after this particular consolidation, look at here. After this consolidation, expect price to what? Expect price to move. That is what we're talking about. After this, expect price to what? expect price to move, expect price to move, expect price to move. So let's move on. Then the fourth one is assess readiness for a move. Assess readiness for a move. Assess readiness for a move. It means that not all pairs are ready to move. Not all pairs are ready to move. So you need to assess readiness for move. Assess readiness forward for move. Assess readiness for move. How can you assess readiness for move? Now this is where I want to start talking about your strategy, guys. I'm going to be talking about what? Your strategy. What is your strategy? You know, you must have what? You must have strategy. Now it can be chart pattern, candlesticks, and all of those things. So now you are assessing what? Readiness for what? For move. You get it? Now it can be support, resistance. You are seeing a weak support, you are seeing a weak resistance. Just like this, you see this particular place we're actually experiencing. Now look at this particular place, this particular place, this particular place. There's actually what? Readiness. Look at this place. You see small candlestick, which means that the market is actually weak of buying. It's weak of buying, of bullish move, so it wants to go for a bearish move. Now once you see this like this alone, is actually a sign to you. This is actually a sign so that you can be able to what? To enter and make this profit. Now if you go to a lower time frame, now you discover that you will see a clear chart pattern here, a very clear chart pattern. Now this chart pattern is what will tell you that the market is actually ready. Now this chart pattern can be candlestick, can be even market structure, our indicators, moving averages, etc, etc. I've discussed moving average already, so if you want you can actually look at the moving averages that I've discussed in my videos, and you enjoy it so well. You enjoy that. I can say you enjoy it so well. You enjoy it so well. Now if you have assessed the readiness of this pair, okay, look at this, look at what happened here, look at this before it moved. Look at what happened here. Look at the readiness here. Look at the readiness around this particular place. Around this particular place, look at the readiness of price around this particular place. You discover that price gave us a sign. Price gave us a sign. This is a clear double bottom, rejection of low prices, rejection of what? Of low price. And after we have seen this, what did we see? A massive movement up, massive movement up, massive movement up, massive movement. Why? Because price already gave us what? Gave us a sign here. Now you can use also, look at this indicator RSI. I'm always with my RSI. As many that I've noticed me, I'm always with my RSI. Look at this. Look at this. Readiness to what? Readiness to buy. Readiness to buy. So this is actually a proof enough that the market will buy. So once you have gotten the readiness for a move, the last trigger that we're waiting for is actually the time entry and exit. The time entry and exit. Now I think we can write here time. Wow, not so good at writing here, but I think next time I will use it. Time entry and exit. Time entry and exit. Now this is our last, which is what, the 5. Time entry and exit. Now time entry and exit is the last thing I will look out for in our trading. Why? Because you must be able to know when you are entering, and you should be able to have a knowledge of what, of your exit. Now entering the trade when the move begins, that is mostly at either the breakout or the breakdown. When we're talking about the breakout, we're talking about bullish move. When we're talking about the breakdown, we're talking about what, bearish move. You need to watch the volume for confirmation, and then you exit when the market shows what, sign of change. That's change to the opposite direction, where you see that the volume have started what, reducing. You exit the market. You exit the market. Now look at it quickly. Look at what I mean. Now we're selling, right? We were selling. We began to sell at this particular place, down to this place. When we saw a change of direction here, look at it. When we saw a change of direction, we close it and what, we buy. Then we also sell. Look at here, we also sell downward here. When we notice change of direction here, we have no option than to close it. Then we had a massive sell here. But we had a massive sell at this particular place here. We had a massive sell here, and then here comes our consolidation. Look at it. So when we saw that the market was about to change at this particular place, if we are in actually a sell, we could have close it. So you must be able to notice when there is actually reversal in the market. You must be able to notice when the market is about to close, because the closure of the market is actually a point whereby market reverses or price reverses. Now take note of all these things that I have taught you. The first thing I have said is that you need to spot the market trend. Either the market is actually on an uptrend or the market is actually on a downtrend. And secondly, what I taught you is that you need to choose asset that moves in the direction of price or trend. Market that moves in same direction. Then the third thing, I said, make sure there is enough cost for a big move, because you don't want to be catching small move. Catching small move will make you to stay in the market for a long time, which means that you need to follow the trend for you to trade. Catch the big move. After that, what will you do next? You wait until there is actually a sign for you to enter. That means your entry and your exit. Then the last one is enter the right time and exit before the move end. Once you have understand this, then you are good to go. This is just the five steps you need to master in Wyckoff trading. This is just the 5 steps you need to master. Now thank you so much for watching this video. Don't forget to subscribe to this channel and turn the notification bell. Share this video with your family and friends. See you at the top. See you in the next video. Have a great day. Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information.